There are three numbers on any ETF page that actually matter, and none of them are the share price. Number one is the expense ratio. This is what the fund charges you every single year, and for a broad index fund like VOO, they charge 0.03%. And here's why this matters more than most people think. On a $100,000 portfolio over 30 years, the difference between a 0.03% expense ratio and a 1% one is over $250K in fees. And fees are the one thing about the market that you can fully control. Number two is total assets. So beginners never check this, but I would say if you can scroll down and you can see how much in total net assets the fund has, that's going to be a really good thing. 979 billion is a lot, but some ETFs have under 100 million and those can actually close down. You might not lose your money, but you might be forced to sell at a really bad time and get hit with a tax bill. So my rule here is that if it has $1 billion or more in assets, that's usually a pretty good sign. And number three is something called tracking difference. So you want to go to the performance table here and just compare the fund's return to the index's return. And you can see that this one performs 15.03% when the benchmark performs 15.07%. In that case, it's actually tracking the index or the benchmark very well, and it's not costing you a lot of money. But there are some ETFs that will have a big tracking difference, and that can cost you in the long run. So for expense ratio, you want it to be cheap. For total assets, you want it to be big. And for the tracking difference, you want it to be accurate. What's your go-to ETF? Let me know in the comments.